Good morning. This is the first of many videos to come during a webinar series. Now, the format I'm using for this webinar series is going to be a video that I'm going to produce probably on Mondays and get it out to you. And then I'm going to follow up with a live session on Thursdays at 2 p.m. for Insider Club members who want to review what's in the videos that I'm producing and to ask questions, and I'll elaborate on what I was talking about. But I chose this format because during live sessions it's too easy for me to get distracted and lose my train of thought and not show everything that I want to show you. So that's why I'm doing the videos first and then the follow-up, so you can ask questions if you have to, if you want to, and if you have to. If not, I'll just go ahead and elaborate upon the subject of the week. Now I'm going to do something different, quite a bit different from my other webinars. I'm not just going to show you a bunch of features, things you can do with HGSI. Yes, I'm going to do that, but I'm going to be a lot more specific about my techniques, the way I use the program. That's the entire purpose of the videos and the live sessions. As we all know, HGSI and in fact many other software programs can just overwhelm you. So I'm going to work to get a process in place for you and explain exactly what I do and what I look for. Now the subject this week is the value of a single chart. This is my primary chart, and the reason I use this chart is because it gives me a great deal of information in one spot. And I'm just going to take you over this. I'll use this and then I'll get into a live chart. This is Wingstop, and this was as of Friday. Actually, it's as of today. I updated with intraday data, and you can see it's pulling back slightly here, black candle, but there is a no supply VPA. So let's start at the top though. This line, or this window, and by the way, I've got a black version of this, and I'll probably use a black version when I get into the video here. But here's the industry, which is restaurants, and you can see it's been trading flat. Well, this stock has generally been going up. This was earnings and then a pullback here, but the pullback is just to the 3 and 6 moving averages. These numbers over here show the relationship of the closing price to the moving averages at the close. This information is not updated on intraday. It's end of day data from the warehouse. Okay, so we know the industry, the group rank, the sector, and the number of stocks in the restaurant group. And then going down here, this is VPA information. You're all probably familiar with this, but by clicking on the most recent bar, it will give you current information, and I'll do that here in a few minutes when I get into the chart, the live chart. Down here, this is the relationships to the moving averages, the volume compared to the 90-day moving average, and that was the closing volume. This is the intraday volume relationship. Is the fan in an uptrend? Yes, it is. By that I mean the 200s here, the 100s here, the 50s here, and the 18 is here. The 3 and the 6 are not part of the fan, just these 4 moving averages. So I have a strong stock going up with a fan in place. It's a box 7 stock or a turnaround stock. The relative strength rank, the HGSI relative strength rank is 97, and the Kirkpatrick relative strength rank is also 97. These are figured 2 different ways. Kirkpatrick is based upon a 26 moving average, 26 period moving average of the close. The HGSI relative strength rank is broken up over a year. The first 3 quarters count as 20% each. The final quarter counts as 40%. So I'm using both of them just to have a better perspective on what the relative strength is. By the way, the relative strength is probably the most important indicator that we can use, much more so than anything else, just to show us the relationship of a security relative to the other stocks in the database. And then the earnings due is here. You can see earnings are out of the way because of this move right here. Now moving down here, we have negative and positive volume pocket pivots, which means that the volume was greater. If it's blue, that means the volume of the up volume is greater than any down volume over the previous 5 or 10 days. This is expansion contraction. This is a micro trend. 3 versus the 6. If the histogram is green, the 3-day exponential moving average is above the 6. If it's red, it's below the 6. This is the same relationship, except I'm using the 6 and the 18-day exponential moving averages. So if the 6 is above the 18, it's green. If it's below, it's red. And here's the 18 versus 50, which is the intermediate term trend. You can see this one is well above the 0 line because this stock has been in a strong uptrend. By a strong uptrend, this is a pivot, and what you look for in a trend is a series of higher pivots. As you go up, here's a pivot, here's a higher pivot, here's a higher pivot. This could be considered a pivot which is higher than this pivot, and then this is another pivot forming right here, and it hasn't resumed the uptrend yet. But in an uptrend, a nice uptrend has a fan spread apart, and then there are a series of higher pivots as it goes up. Now, whenever the 3 goes down through the 6, you can see that it happened every time here. Those were opportunities for low risk entries. The histogram's gone negative here and here and here and here. This one wasn't the best because it went down a little further, but then as it went down here, notice how short these bars are. That means there isn't a lot of pressure on the 3 going down through the 6, or it hasn't gone down through very far. And each one of these represented a buying opportunity, a low risk buying opportunity where you could put your stop in below the low. And by the way, these are confirmed with VPA flags here. And then as the position is entered, if your stop's below here, you would not have been stopped out on that. So these are low risk entry points. They're not all going to work out, but your risk is going to be limited because you know where the risk is, the setup risk is. A lot of times on these pullbacks, you'll see the price pull back to one of the moving averages. Here it pulled back to the 18-day exponential moving average. Here it pulled back to the 50-day moving average. These didn't quite get down to the 50, but you can see that it was trading sideways. And then when the 3 crossed up through the 6, that is a buy point, or could be considered a buy point, but we'll talk a lot about pivots as I go through this webinar series. And finally, the last indicator on here is the volume point of control, which shows over a 10-day period when volume turned positive, and I'll explain that in a separate video. It's something that you really have to see visually. Okay, so this is why I use this chart. I get a tremendous amount of information out of it. For flipping charts, it's not the fastest chart in the world in HGSI, but it doesn't take long to flip through a bunch of stocks with this chart and get a lot of information. In addition to this, and I don't show it in this chart right here, but the fundamental panel is here, so I can quickly check out the fundamental information. Now I'm going to move into HGSI, and we'll take a look at some charts using this information. Now for this video, I'm going to use black charts because the colors show up a lot better on the background, especially down here on the moving average crossovers. I'm using one of my scans called long-term leaders because it's based upon relative strength. And rather than using long-term leaders, which pulls up 253 stocks, I'm going to go down here to long-term leaders, HGS box stocks. Now, most of you probably know that box stocks are stocks with consistent earnings growth, and just by requiring that, I can eliminate a lot of stocks to look at. Now, let's just take a look at I'm going to bring the filter up, show you that this is a very simple filter. Stocks are $5 and above, trading at least a 250,000 shares based upon the 90-day moving average. They have to be assigned to a group. Common stock, relative strength rank based upon HGSI is greater than or equal to 90, and Kirkpatrick is also greater than or equal to 90, and HGS boxes is greater than 0, which limits these stocks to box stocks only. Now, if you look down these columns right here, you can see the relative strength rank based upon HGSI, and here's the Kirkpatrick relative strength rank. Now, just because these stocks have high relative strength ranks doesn't mean that they all have fans that are uptrending like this. I see stocks that are still just coming out of downtrends, and it's just the way the calculations work. But there are plenty of good opportunities here, and what I like to do is I like to make sure that I begin looking at stocks that have the fan in place. In other words, these are stacked properly, and the way to do that is to, and I've got a fairly good sized monitor here, but I'm just going to scroll over here. You can see that in this column right here, this is the fan uptrend. If I sort on that, notice that all of these down to number 59 have the fan with the moving averages stacked. Now, they may not be stacked perfectly, but they're still above one another, and these 6 do not have that. So I try to start with stocks that are in an uptrend, and I'll just go back over here to the left, and I'll begin here. Now, this looks like a lot of information, and it really is, but I'll show you what I use most often. Remember, the fan is in place on the sort. That's what I'm sorted on. And then I'm going to go in here, and what I want to do is I want to sort on the days since the crossover of the 3 and the 6 exponential moving average. So I'm just going to type 3 in here, and that quickly takes me to days since the 3 crossed the 6. That's my secondary sort. So I've got a fan uptrend and a secondary sort. I resorted this, and now you can see that the stocks with a fan uptrend in place that are the oldest or the strongest based upon the number of days since the crossover come to the top of the list. But I'm interested in looking down the list. But before I do that, let's just take a look here at Chipotle. You can see Chipotle, if I zoom out on this, get the fundamentals out of the way. It's in a strong group. Earnings came out. It's been basing sideways, but the crossover happened clear back here, and that was 47 days ago, 0 being the crossover day. So it's been in a strong trend. If I put a crosshair on here, You can see that it was in a downtrend. There were VPA flags here indicating a setup, and then here is a 3 crossing over the 6. So here's a low risk entry down here, even though the trend is down, and then it just started working its way higher as the group started working its way higher. There was a volume pocket pivot along with the crossover, and you can see the volume point of control was already positive. So that's a long-term stock. Pulte Group, housing has been strong. That crossed over 43 days ago, which would have been right in here. On this day, you can see there was a gap down, then it closed high with a volume pocket pivot, and then the crossover happened the next day. This bounced off of the 50-day moving average, and it's really been moving up ever since. There have been some pullbacks to the 18, not enough to get the 3 below the 6, but if you track stocks like this, when they pull back to these moving averages, those are all low risk entries. Look at the housing stocks, group rank 97. But what I'm looking for is I'm looking for opportunity for low risk entry. So I'm going to go down here and I'll just look at this stock, ELF Beauty. Why? Because the 3 crossed the 6 yesterday and the volume point of control crossed the prior day. This is the end of day information yesterday. Volume was above average. The spread was below average and it closed in the mid, but the 3 crossed the 6. So let's just bring it up and take a look at it. You can see, I'll turn the crossover off temporarily, that the 3 crossed the 6 yesterday. The 6 has not quite crossed the 18, but the 18 never did cross down through the 50, and the volume point of control actually crossed a couple of days ago, it looks like, right here. Volume is not heavy today, but yesterday it was slightly above the moving average. Now, this information, like I said, is from yesterday, but if I click on today's candle, this gives me the current information. So volume is still low, the spread's above average, and you can see that right here. The close is very high. So a low risk entry here. This was an effort to fall, but it didn't follow through. Then there was an inside day, another day. Let me put the crosshair back on. On that day, the volume point of control turned positive. So the pivot, for it to be a confirmed pivot, really needs to take out the high of this bar, which is lower than this bar, but I'm looking for this to be higher than this bar. I mean, it certainly can be taken there, but theoretically a confirmed pivot is above the high of the prior bar before this. But still, this should have been taken at that point, but it's still moving up. Let's look here though. Earnings are yet to come, 524, so you really need to be careful. I'm going to put this in a watch list. I created a watch list for today, so we'll take a look at this in the future. But this is what you're looking for. You're looking for low risk entries, and the easiest way to look for these candidates is to look for the 0 crossover days, or even go down here on these that have not crossed over yet. Let's look at one more. FTAI Aviation. Let me do a update here. See what it looks like right now. Well, it's moving up. I'm doing manual updating now. So here is a test, confirmation of that test, and this would be a pivot, and the confirmed pivot, if we use the prior day's candle, which is above this low pivot, it would be right at the buy point right now, somewhere in that area, for it to go up. So what's it saying today? Volume's low though, spread's narrow, and the close is mid right now. Let's add this one too, and I'll talk about this on Thursday. Let's look at a couple other things. The industry group is weak. It's flat. Let's see. Volume's very light. I'm concerned about that. But I just want to add it, and we'll follow up with it on Thursday. Let's do one more here. OEC. I'm not familiar with this one. Looks a little bit loose, so I'm not going to spend any time on that. Let's go back here. This crossed. The zero crossover to the downside was yesterday. See, days since. So zero, and the volume point of control was 2 days ago. So let's take a look at it. Relative strength is 97.95. And this is what we have here. This was a strong stock moving up here. Here's the 3 crossing the 6. But notice the volume was pretty light here on this sell-off. So this could be setting up. This is an inside a day-to-day. It's inside the body of this stock. Look at all these volume pocket pivots as it moved up right here and here. And then you can see the momentum starting to fall off here. It starts falling off as the 3 starts getting closer to the 6. But there's been a shakeout. And let's look at this. You can see the earnings are out of the way. There's no revenue. This is a biotech stock. A lot of these don't have revenue. It's all on the come in the future. But there's an inside day here, and it's a low risk trade because this would be the low pivot. Theoretically, it would have to take this candle out for it to be a buy. That's quite a stretch. So this one you may want to, if you're considering something like this, just put a stop in below this if it continues to move up, not wait for it to take out the prior candle to complete that confirmed pivot. Let's add this one too. I'll do one more and then I'm going to end this video. I don't want it to get too long. Let's do the Las Vegas Sands. Okay, now this one gapped up, it broke out, it came back down, it held the 18 for a while, but look at this, the group is going down, so that's not good. The run may be over on this, but we're getting a no supply today. Here's where the 3 crossed down below the 6. The 6 just went below the 18, and the volume point of control is negative right now. I don't like the fact that the industry group is turned down. There are 35 stocks in this group. That's a lot of stocks, so there must be a lot of them going down. You want to go with the flow. I said I was going to stop, but let's do one more. Let's go up here and take a look at this one right here. Well, Wingstop is the one I looked at, I believe, in my opening slide. I could be wrong about that. But anyway, the VPOC crossed 22 days ago, and the 3 crossed the 6 2 days ago. 0's the crossover day, and here it is right here. I just updated, so this should be correct. It hasn't come down to test the 18 yet. This is a small. Spread's very narrow, volume's low. The close is down at this time of day, so it is looking for direction right now. But the fan, you can see, is clearly up. This is an expensive stock, though, and I believe earnings are out of the way. Yes, they are, and they were good. But this is the result of the earnings, and then the shakeout. Those who chased got caught on this one. I'll just add it to the list. We'll check it out on Thursday. Motorola Solutions. Let's take a look at this one. I know this one has a decent looking chart. You can see the fan is spread out. The industry group is only at 10. It's flat. The group is doing nothing. Came down here, bounced off the 50. It failed trying to go higher. This would be the low pivot here, and A confirmed buy point would have been right in here. But yesterday's move up, you can see the volume was almost up to the 90. It closed at the high. Volume was less than average, spread below average. The close was very high yesterday. Today, volume's low, spread's below average, and the close is down. I really don't like it. It's an expensive stock. It's got a lot of resistance up here. Now, I am not looking at weekly charts right now. That's going to come. I'm just showing you how I look for these stocks that are still relatively fresh or just crossing over or have pulled back. This is where we can find the low risk stocks. Now these stocks down here, remember the fan is not up on these 6 stocks, so I would be looking at these right in here where the fan is in place, and then work my way up the list a little bit to find the stocks that are not too old based upon these 2 indicators. Okay, I'm going to leave it at that for now. We'll discuss this more on Thursday. Thank you for listening, and thanks for attending the webinars.